Hey gang, Uncle Doug dropping some more mortgage knowledge. Look, are you in a high cost area where you need a jumbo loan? How does a 10% down jumbo loan sound to you? Realtors, do you have a client that is trying to buy a high cost house and just cannot put together the 15 or 20% they need for down? I've got a loan product. It's a 30-year first position HELOC tied to an FDIC insured checking account, and this loan will outperform any conventional loan, hands down, no question asked. And the great thing about this is also an interest cost savings loan, which means the clients typically pay off their house in 7 to 12 years and can save, if they have significant reserves or surplus income at the end of every month, they can literally save in interest cost savings the amount of the principal that they borrowed. Check this out. So we're going to do a quick, I talked to some guys yesterday, they're saying, hey, in our area, typically the houses are 2.5 mil. I said, all right, let's go 2.5 mil, 10% down. Mortgage rates for a jumbo loan right now are anywhere between 6.49 and 6.99 right now. If you even if you just Google that number without getting into points or any of the other stuff, let's say let's say you're securing a rate from somebody at 6.49. Let's say your household deposit's roughly $60,000 net a month, or if you're self-employed, you're running all your money through your checking account, 60 grand. Otherwise, if you're W-2'd, this is after your payroll taxes, your insurances, your 401k, and each scenario is different. So don't get hung up on the numbers. Just understand how powerful this is, how powerful this loan is. Reach out to me, because check this out. Now, let's say that this particular borrower is spending the 17 grand a month on their house, 14 in principal and interest, another 3 grand in taxes and insurances. We're going to assume that they're spending almost $22,000 on other ancillary expenses, food, entertainment, maybe vacations, cars, anything like that, and they're also putting away 21 grand a month. And let's look at the results. Holy moly! Look at this. They are going to pay off the house in 7 years. So that was a $2.5 million house. 7 years from now, it's worth what? Maybe $4 million in a lot of these higher cost areas, right? $3.5 million maybe. So now you've got a $3.5 or $4 million house paid free and clear. You've got a $2.25 million line of credit free and clear and available. So you're now liquid, as you can use that money for whatever you want. You can put your kids through college on it. You can write a check to get your vacation home that you wanted, the dream vacation. Or you take a year off. You could take a year off and literally not make any payments and go write the great American novel. This loan is absolutely amazing. We're going to save the client $2.2 million in interest expense based on this particular scenario. And how does a 1.85 comparison loan effective APR sound? So I put it in at 6.49. Our loan performs based on this scenario. Now again, each scenario is different. Not everyone's going to qualify. But this particular scenario is performing at 1.85% comparison to loan effective APR. For it to even not work, we'd have to have rates go all the way up to 16%. Client can make an interest-only payment of 8 grand versus the principal and interest payment of 14. So if they have a cash flow issue, they can literally, if they've got access, if they've got availability on the line, so let's say they've been paying for a year and they pay down a bunch of principal, they can literally just stop making payments and let the balance climb. And like I said earlier, you can go write the great American novel, take a year off, and just let the interest pile back onto the loan. No harm done to your credit whatsoever. Amazing, right? Tell me this is not the most amazing loan you've ever seen. The pay down is really, really rapid, and unlike some of the other strategies, I pay half a payment every 2 weeks. Great, you're making 13 payments a year. There's no mystery there. You're still not liquid. Do that for 5 years and call your lender and go, hey, I just lost my job. You know what they say? That's unfortunate. Make your damn payment. You're not liquid. This creates safety, liquidity, and return, because your money, rather than sitting in a crappy checking account that pays you nothing, is now sheltering you from 6.49% interest. And since that is savings and not interest payment to you, that is not taxable. So 6.49 could be performing at 7.5%, 8%, depending on your tax bracket and other factors. So that's almost equal to what the stock market's paying. That is this powerful. So look what happens. In 24 months, you've paid down $500,000 on your mortgage versus on a 30-year amortizing loan, you paid down 52. And this is all liquid. You could write a check for $500,000 tomorrow without asking anyone for permission, without having to qualify. This is the Home Select from Geneva. We're having a big Zoom presentation about this loan to get more into it on October 24th at 6 p.m. You can go to gohomeselect.com. You can see it right here behind me. Or you can go to homeselectchallenge.com. They both take you to the same place. Go to the More tab and sign up. We won't abuse your email address. Trust me, this is a game changer for your clients, realtors, for your clients if you're a financial planner, CPA, insurance agent, or attorney. And if you're a borrower, I don't know of any loan more powerful. I got licensed, my first real estate license, in 1997. And I've done everything in this space. I've never seen a loan this powerful. And you can go to this page, homeselectchallenge.com. You can learn more, see more presentations in here. And if you go to take the challenge yourself, you can actually go here and it will give you instructions on how to do the simulation like I just did, and give you a link directly to the simulator. You don't have to put in any proprietary information. We're not asking you for an email address or anything. Take me to the Home Simulator Challenge, and lo and behold, there you go, and you can play with it right here and get started yourself. Trust me, this is a game changer. Why would you use pre-boomer 30-year amortizing loan product that was pre-boomer? I mean, it was designed in the 1930s to get people buying houses after the Great Depression. This is cutting edge. It's been around for 20 years. To my knowledge, there's never been a default on this loan, but it is not too good to be true. Reach out to me and I'll explain why. But for qualified borrowers, there's nothing better. Have yourselves a great day. Be the change you want to see in the world. We'll talk